Yo, yo, yo. Welcome back to the channel. I wanted to just cut right to the chase here and talk about something a little bit different. I know that lately on this channel we've been doing a lot of daily updates and stuff like that, but I want to talk about some more macro trends when it comes to AMC and what are some things that I'm looking for, and also formulate some more macro ideas, because I know I talk about day-to-day analysis here, but my real, where I really have my strong suit is on a more macro trend and recognizing macro trends and then taking advantage of them. So, and this kind of can go into where my conviction comes from in a way, at least from a technical sense, right? We don't talk about fundamentals too much on this channel. We don't talk about like the short interest or option chain or anything else like that. We strictly talk about price action. So, yeah, let's just jump right in. If you want to use the tool that I'm using, this is TradingView. I have a link down in the description. It's a referral link. The tool is completely free to use as well. So go ahead and use that link down in the description. You can also follow me on Twitter, and I have a Discord link down below as well that you can jump into my Discord if you ever want to ask me any questions or anything. So, yeah, to tell the story of AMC, this is the weekly chart that we're looking at, and we can look at basically all the way back to 2014, or really December of 2013 is when I have this charted from, and that's probably when the IPO happened. I don't really know. I wasn't following AMC back then, but and since its inception, we have a main sort of bearish mean trend line that was formed pretty early on in AMC's life cycle. And you could also say that there was a bullish mean trend line initially whenever it opened. And what I mean by this is these are trend lines that the price historically works its way back to. On a more macro scale. So this bearish mean trend line that I drew here sort of works its way all the way down and has ended in January of this year. But what I mean by this is you can sort of see the price action find itself towards this trend line. Even if it extends away from it, it tends to find its way back, extends away from it again, and then finds its way back, and then it goes below it, but still it finds its way back, right? And so rather than a regular trend line that you see on most people's charts, this is a way to actually look at the overall what sort of price expectations that you can have when you're looking at an asset. And so I wanted to talk about where we are now and what I believe is a bullish mean trend line. And this is sort of where the trend has shifted, beginning actually in March of 2020. And a lot of people would probably assume that this would have been probably the worst time to be buying AMC stock at the time, but it turns out that it was actually the best relative to where it stands today. Down here in the $2 range, $1 to $2 range. High $1 range. So this bullish trend line since then has sort of been a price magnet in the same way that I described with the other one, right? As price deviates away from it. Again, these are weekly candles. It tends to work its way back. And the way that we can use a tool like this is we can begin to use it to analyze where we may or may not be now. Now, historically, well, at least in the past year, when this trend has been more and more relevant, we've seen these moves up towards it, and it's not a perfect trend line, but you can see that normally on a secondary test to the downside this year, we have seen a retest at some point. If you're curious as to where this line stands on the weekly chart as of now, we can do a horizontal ray. So if it were to hit this trend line today, it would be $62.91 this week. I'm not necessarily saying that that's my expectation, but it is interesting to look at the price from this perspective and see that it moves up to $65, and then the next week it'll move up to $70-ish. So it is an exponential trend. This is a logarithmic chart, which measures price action in regards to percentage gain rather than dollars, gain or loss. But you can see that this is an exponential trend, and in the next few months, you're going to be up in near the hundreds. Now, does that mean that that's going to happen with certainty, or that we're always going to be meant to come back and test this trend at some point? Certainly not, right? But from another perspective, you could say that it may be within reason to suggest that we would come back and test it. And the reason that I say that is because from an Elliott wave perspective, I drew this chart up today. From an Elliott wave perspective, I believe that we are either trying to discover where the bottom of wave 4 is, or we're going into wave 5 from a macro scale. And I'll break down this chart piece by piece because I know that it's a lot that just popped up on the screen. But if you're not familiar with Elliott wave, it's basically comprised of an impulse wave, which is the direction that the stock is pretty much trending, is comprised of a 5-wave set that would look something like this. And within that 5-wave set, you're going to have other sets of 5 waves that exist within the 1, the 3, and the 5 wave. And then you have ABC corrections for the 2 and the 4 wave. So what does this mean? I was working on this chart earlier today before I went to the gym, and the things that I really want to point out are that you have a clear wave 2 down to about your 786 Fibonacci retracement level, which is the second most common retracement that you'll see next to the 618 retracement, especially on a wave 2. And then you had your wave 3 up to $72.71. And Fibonacci is a pretty powerful tool. I'll say that because using the Fibonacci extension tool, we were actually able to predict and I mean, I didn't do this in real time because I didn't really start paying attention until like April of 2021. But using this extension tool, you actually would have been able to find almost perfectly the level that AMC ended up having that bull run to in June, which is around that $71 to $72 level with the 3.618. Now, whenever you're analyzing this, obviously these are different key levels, and it doesn't necessarily mean that it will go to any of these certain levels, but traders will usually use this in a way that they can sell off in waves, right? So you would say like, okay, we're getting an extension here where, I think that this is the bottom, this was the top, this is the bottom here. I'm going to have a sell-off here at the 1.618 or at or near it, right? So maybe you would sell off a little bit earlier in preparation for maybe algorithms to do the same thing. And algorithms do this as well, right? Algorithms use these Fibonacci levels as selling points. So, and then you would even start a little bit lower here. The returns are pretty good. If you entered down here in the $5 range and you can sell out at $23, that's a 4x return. So the algorithms, that's why you see these levels being heavily traded. So anyway, let's go back to the more macro view. And let's see. In that wave 2 correction, and I think on the daily chart, this chart looks a little bit better because I think that's how I drew it. Yep. We had our wave 2 correction, the consolidation down here at the bottom by the 786. That lasted a few days, looks like about 2 weeks. And then we extended up here and we had our move into trading days of consolidation. We had 55 trading days of consolidation in this range, give or take a few days. You could extend it to the right or to the left, but this is just a general range. And you can see here that we settled at the 786, and then we came up, got beaten down here, but then ultimately found long-term support at the 618. Support here, right? The Fibonacci 618 level. So how this differentiates so far from this cycle that we're in, and why I still am saying that it's possible that we haven't completed wave 4 yet, is we have yet to see the 786 retracement. And this note I have here says, if this is a wave 4, it is only corrected to the 618 to 65 range, which is a normal correction, but would insinuate that there is no cyclical nature to Fibonacci retracements in AMC if this retracement is drawn correctly from the bottom of wave 2 to the top of wave 3. So basically, assuming that I drew this line correctly from the bottom of wave 2 to the top of wave 3 here, this is the correct golden pocket, is what we call this, the 618 to the 65 Fibonacci levels. And I know that cycle theory has played a big role in the AMC community, and I was just pointing out that based on this, if this is the bottom of this corrective move down, then that insinuates that the Fibonacci levels aren't being repeated in this cycle theory, right? And so I also wanted to point out that this trading range here that we're in, November 9th would make it 55 trading days of consolidation to be similar to this consolidation period. And you can see that with the blue line here. And then these are the predictive Fibonacci extensions. If at the end of this we were to have a move up, which I assume we would, because I believe that we're in, we are either in or have completed a wave 4, then these would be the key levels that you would be looking at from a Fibonacci standpoint, and where the price could go on a move up. Alternatively speaking, we already have our retracement levels. So you could say the super key Fibonacci retracement levels that we would be looking at are the 39.05, the 31.05 to the $28.88, which is where we saw our local bottom. And then after that, really the $19.66 cent range would be the 0.786 retracement, as you can see here. In my personal opinion, I think it's most likely that we've already seen the bottom for AMC in this particular cycle. And I do believe that what is happening right now is we are seeing essentially respect of these channels that I've drawn here, which is keeping us in our Elliott 5-wave pattern, our 5-wave Elliott theory. So that's basically the summary of all the ideas. I do want to have I do want to make some videos that have the specific ideas broken down separately, so that I can always kind of point back to them from a macro perspective in my daily updates. But I just thought for now it would be interesting for me to go through my technical bullish thesis and what I'm looking at from a bullish standpoint technically. So I know today was an exciting day. We closed at $43. I do believe that it's pretty clear here that perhaps my thesis all along was correct, which is this was a wave 2 and now we're going into wave 3. But obviously there is some work to do here, but things are looking up, especially based on the, oh wait, did I delete those lines? Oh, the channeled, well, the mean support. So let's try and draw that again. It's just a line. No, I mean, I had them prepared. Why did I delete them? So perhaps this is pretty much it. But I mean, this is how you come up with channels, by the way. I mean, you can pretty much do something like this, and then you can see that there's a consistent trend of price action that you can follow. And I believe that algorithms also trade in this way. I think that it's pretty safe to say that there is some algorithmic nature to these upward trend lines being respected along the way. But yeah, so hopefully you gain something from this video. Hopefully you think that this video is pretty interesting from a macro perspective. I may do just a daily breakdown as well, but I just wanted to put this out there because I know that on a day-to-day basis, for example, last week towards the end of the week, I was calling for $38 based on Fibonacci, based on Max Payne, stuff like that, and people were like, "Oh, you got it wrong" or whatever on Twitter. And I'm just like, well, it's not really about me predicting, and I know that that's kind of the nature of the game, that it is kind of you guys are looking to me to try and predict price action, et cetera, but that's not really the goal of this channel or my Twitter or anything like that, my social network influence. My goal is to help people who may or may not be less experienced or more experienced in the markets pick up new tools and new ways to look at charts from a technical perspective in order to strengthen their fundamental conviction. Because I have a fundamental conviction in the play, but until that changes, I don't really care about the news. I don't care about whatever the SEC just did or whatever, that stuff that everybody talks about all the time. I care more about the public sentiment, and whether or not this price action is natural, the public sentiment is still affected by the price action, right? So people who aren't apes, who aren't following AMC day to day, they will still be affected by the price action that we're seeing here. And they're going to be the ones that make the new buying decision. And I think that that's really important in this, and it tends to be overlooked, frankly, in my opinion. So yeah, that's pretty much it. Again, my TradingView link is down below, totally free. They do have premium subscriptions. I get a kickback if you do a premium subscription, but obviously it's not required. Everything that I used in this video today was completely free to use. As well, my Twitter is down below if you want to talk to me or share your thoughts with me, anything like that. That's a good place to do so. Thank you for watching till the end. That helps us in the YouTube algorithm, helps this video get out to more people. And other than that, you can go check out my Discord. It's down below if you're on Discord. It's a pretty cool place. We all hang out and talk about charts and stuff. And other than that, have a good rest of your day. All right, take it easy.